What is up? Welcome back to another video. In this video, I am going to be talking about liquidity. So if you are not 100% sure about liquidity, this is the video for you. Liquidity is the most important thing, or one of the most important things when it comes to ICT's concepts and trading in general, because liquidity is where the market wants to target. If you don't know what I mean by liquidity, all liquidity means is just where stops are in the market. So you have buy side liquidity and you have sell side liquidity. Now, all this means is, let's say, for example, we have buy side liquidity up here. All this means is we have buy stops resting at this point in the market. What I mean by that as well is, let's say we have a retail trader. If they are going short around here or anywhere, in fact, their stop losses are most likely going to be at this highest point right here, and that is why it is called liquidity. And what we want to do as traders is target this liquidity, because that's where a lot of money is resting in the market and where price wants to target, because without liquidity, then the big people, the big institutions and banks will not be able to place their orders, so they need liquidity to move the markets. So there are different types of liquidity. There is trendline liquidity, other known as low resistance liquidity. There is buy side and sell side swing highs and swing lows liquidity, and then there is also equal highs and equal lows liquidity, and they are all just as important as each other. I would personally say equal highs and equal lows are the strongest type of liquidity. Then you have swing highs and swing lows, and then trendline liquidity. But if you are unsure what all of those are, I will explain it for you now. So let's jump straight into trendline liquidity. Now, this is pretty self-explanatory. Um, as you know, us as ICT concepts and the concepts that I teach, we do not trade using trend lines or anything like that. So what we do not trade is using trend lines, but we can use trend line liquidity to target where price action wants to go in the market. So let's say we have a very strong buy side trend line. So right here we have a very strong trend line, and you guys are probably saying, oh, what are you on about trend line? We don't use trend lines. You're right, we don't use trend lines at all, but this is a type of liquidity. So as you can see, this trend line right here, this dotted line, imagine all these lines are candles and candlesticks. Every time price reaches this point in the market, the retail traders, so the people that trade dumb money, are all shorting this position. So when they are entering in positions like this, they are going short here, they are going short here, they are going short here, they're going short every time this hits this trend line. So what is resting all up here, as you can see, right here, there is stop losses, right here, there is stop losses, there is stop losses. So what is price most likely want to do? Price will want to take out this liquidity, so that we can carry on moving in its designated direction. So if we got a trade entry around here, then where would our target be? Our target would be this trend line liquidity over here. So that is one way that we use trend line liquidity, and then it is same for sell side if we have a trend line going from the bottom. So let's say we have a trend line like that, and at the top it isn't really a trend line. So if we have a nice trend line down here, like something like that, as you can see, price is tapping this once, twice, 3, 4, 5 times. Now this works very nice if it is very clear liquidity. So um, so once you're going on your charts, this can be done in any time frame as well. You can use the 1 minute, 5 minute, 15 minute, whatever time frame you want to look for this sell side liquidity or buy side liquidity trend lines. So as you can see, we are tapping this point of the market multiple times. So retail traders will all be going long here. They'll be putting their stop loss, something like that. They'll be going long there. They'll be going long there. They'll be going long there. So what will we do if we get a trade entry around here? Where would our main target be? Our main target would be down here, and we would target all of these stop losses that we would know that are sitting below the trendline liquidity. Now, as well as using it as your trade entries, you can also use this as a reason why to not get into a trade. So if you see an A plus setup, for example, but if you see an A plus long setup right here, but you know that all this trendline liquidity is sitting below, then you can just use some intuition, hope that's the right word, and then you'll realize, oh, there's so much liquidity below. I'm not going to take this long position just because price has a high chance of wanting to at least come back down, take out this trendline liquidity, and then carry on going up. So that is what I do a lot with equal highs and equal lows. But what have I just clicked? But I will get on to that. So the next liquidity we are going to talk about is the equal highs and equal lows. So all this is let's say these are candlesticks again. It is just an equal high, a high in the market that price action leaves and then comes back to at a later date and taps the exact same point. So right here, let's say that price came to this point and then it moves away and then it comes back and taps the exact same point right there. Then this is an extremely strong, let's almost say a magnet, even though it's not, because price doesn't have to come back to this point, but it's just a magnet because price is most likely to come to this point at some point. Now, the hard part is finding the setup, but you just need to be able to identify the liquidity first. So yeah, equal highs are one of my favorite types of liquidity to target. You'll see a lot of equal highs on the 1 minute. So if I just go for the on the 1 minute time frame for you, as you can see right here, we have perfect equal highs. So you might see quite a lot of equal highs on the 1 minute. And now a lot of people ask me, because you'll see a lot of equal highs right next to each other right here. Do you see how we have these equal highs next to each other right here and right here? You will see a lot of that in the market. Now these are still valid equal highs, but they are not as strong as a draw of liquidity than if they are further away. And the reason for that is because in this situation right here, we have equal highs, yes, but only on the 1 minute. I'm talking about right here. We have these equal highs, but only on the 1 minute time frame. Now, if we go to a 5 minute time frame, as you can see, we have equal highs both there and there. So we have equal highs here and here. It's just on the 5 minute time frame. So if the equal highs are further away, then the stronger that they are. And then as you can see, they're even on the 15-minute time frame. So this example is an extremely strong draw of liquidity. And yeah, this could definitely be a target of where you want price to go. There are definitely lots of stop losses resting all above this point here. So price may want to come back up and take out these equal highs before carrying on in its direction. And then obviously you have the exact same thing with equal lows. It's literally the exact same thing. So if you have equal lows, it's just an extremely strong target. Now, one of the most important things is your swing highs and swing lows. Now, this is where your main targets will be. This is where you will leave runners to this point. You will look to take off or look to take off most of your positions. So let's say we are looking at this chart on the 1 hour time frame right now, where if we are short, let's say we're in a short position right here, where would our draw of liquidity be and where would our target be? Now, I can see two clear answers. The first answer would be right here. This is where your first target would be, because this is a swing low and this is what we call sell side liquidity. Cool. So this is just where lots and lots of stop losses are sitting right below this point because it is a clear swing low. Now, what we also have is below that we have another swing low. So what price could do if the bias is short, which I personally am quite bearish, price could want to, if you're short right here and you're targeting this sell side liquidity as your main target, what you would do once we take this sell side liquidity is you could always take some profits right here, because once price hits this sell side liquidity right here, price can always reverse because it was already took a lot of sell side liquidity. So that is a bit more of why we target certain liquidities. I know I'm going off on a bit of a tangent now, but it is very useful to know and remember. So yeah, that is your different types of liquidity. So there is literally liquidity everywhere in the market. So if the market was going to go long, we have buy side liquidity sitting right there. We also have buy side liquidity there. As you see, that is a swing high. We have buy side liquidity there. So if you got into a trade around here, let's say price action comes up, you get into a trade around here, your target would be these buy side liquidities right here. Now, remember, price could always just take one liquidity and come back down. Price doesn't have to take every single buy side liquidity. So just with screen time, you will be able to see which liquidities get hit more than others and where you want to take your partials and take most of your take profits. So that is what liquidity is. This was a video just to start getting your understanding about liquidity. I'll probably do another video on liquidity again, because as I said, it is one of the most important ICT techniques, because that is where price action wants to go. So yeah, thank you guys for watching. Make sure you join the Discord in the description where I live trade every single day completely for free.